Good evening, everyone. Welcome to the 98th episode of Friday Fruits sessions. So, before I take you through what the community is all about, I would like, say, Kalpana Thakur to share about how we began and what she feels about nearing the 100th episode for the community. Kalpana, please share in your opening remarks.
Thank you. Thank you so much, CA Sunita Rathore. Um, and first of all, I would like to appreciate our today's speaker for accepting this invitation and sharing her experience and knowledge with our platform. Thank you so much, CA Anupama, for accepting our invitation. Coming back to expressing my joy when we are about to complete our century of episode. It's not only we are about we completing that 100 milestone, it is about that cumulative effort that we together with our whole core team member, starting with CA Sunita Rathore, CA Aishwarya, CA Jyoti, CA Poonam Pathak, CA Harshali. It's cumulative effort of all of us. And over and above that, it's that hunger that I do mention in every session, that hunger and curiosity of all our participant and community member. We will be reaching 500 numbers soon. That hunger and curiosity to learn and become better version of ourselves. So yes, I'm top of the world. And when it comes to making that impact, we are thinking beyond this weekly virtual session, and we'll announce all of those things soon. Without taking much time, Caro first time came in 2026. From that time till now, I've been part of one of the big four, and now I'm practicing in one of these small firm. And when I do join the seminars, webinar, we professional have to keep ourselves updated when it comes to um, compliances, not only compliance, the onus. When we talk about audit report, the onus is much on our shoulder as statutory auditor. And when that is the case, we should be cautious and aware of what we have to do and what not. And that's why we are having today's session by CA. Thank you everyone for joining. Looking forward for an insightful discussion on this technical topic. Over to you, CA Sunita Rathore. Thank you so much.
Thank you, Sri Kalpana. So, just let me give you a brief about the Friday Feed community. So, it is a brainchild of CA Poonam Pathak and CA Kalpana Thakur under the aegis of our very own CA Dr. Dhukia, Rajkumar Dhukia sir. And it was created with a powerful vision to uplift and upskill and empower the women professionals in the field, in any field work. So it's open to all, but the majority of our community members are CAs and CS females. It is more than just a learning platform. Here we um, cater and nurture professional excellence, personal growth, and confidence. And just as importantly, it is a medium of having a network for amongst the professional ladies and being there together together for each other in not just professional capacity but also um, having having that presence, that feeling of confidence that yes, we are in a community, and if we need help, someone will be there to help us. And today's session is a mixture of both the professional end of it, of a session, as well as some personal growth aspects also. So we have a very um, uh, different kind of a session that is going to be taken uh, today by our speaker. So let me just give you an introduction of our speaker. It's my pleasure to introduce the speaker for today, CA Anupama B. A dynamic and accomplished chartered accountant, Anupama brings with her over 7 years of experience in the field of statutory audit, beginning her professional journey at a remarkable age of 19 with Deloitte. She has grown into her current role as deputy manager in audit and assurance function. Her expertise spans end-to-end statutory audits across wide range of industries, including automobile, telecom, IT, power, and industrial equipment. Her deep understanding of regulatory frameworks, including company law, Indian accounting standards, and taxation laws, has enabled her to effectively guide clients into navigating complex compliance requirements. Anupama's excellence has been recognized through prestigious accolades such as Live the Dot and Move the Dot awards at Deloitte, reflecting her commitment to client centricity and high performance standards. What truly sets her apart is her passion for learning and sharing knowledge. She has been presenting at national conferences since her early academic years and has mentored over 2,500 students through various seminars as a career coach. Please join me in warmly welcoming CA Anupama B. Today, she's going to take us through decoding CARO, as well as a twist to how actually maintain that emotional balance while juggling our work commitments. So we will get to enjoy two pieces of different sides of our life, professional as well as personal, with our speaker today. The stage is all yours, CL Anupama.
Thank you so much, Mom, for that brief introduction, and I'm glad I've got this opportunity to present before you all and a part of this Friday fleet. Thank you, Kalpana ma'am, for giving me this opportunity, and also Jyoti ma'am, who has been, constant touch with me with respect to the webinars. And thanks to my friend Bhavana, in her absence here, that she is the one who introduced me to this very, very beautiful team. And all the very best and the very glorious future ahead to this Friday fleet. You're doing a very great job, and I'm really, really happy to be part of this. So, with that, a very good evening, good afternoon, and good evening. We are all mid because of the Bangalore weather changes. You never know when the afternoon turns into evening. So, very warm welcome to my session today. And today we are going to learn about decoding CARO 2020 and also a little insights on, this work, how the work-life balance and things get stuff very stressful nowadays. So how we can balance out that as well. Uh, with your permission, can I start sharing my screen with my presentation?
Yes, please.
Okay, thank you. Okay, I hope, let me know once my screen is visible. Yeah, all right. Okay, yes, all right. So with that, with now to the audience that I would like to ask one thing. Uh, I'm sure you might have all read about this CARO and audit reporting and all this compliances as an auditor, what we do. But any idea on why, apart from the auditor's report, why this CARO report is required? Maybe you can type in the chat box, or you can just, give a thumbs up. I'm not sure if participants are allowed to unmute and speak. Is that allowed, ma'am?
Yes.
Okay, okay, great. Anyone would like to be part of uh, knowing or why, CARO, apart from the normal audit report that we give, is important? Okay. So, basically, we know we have to give as an auditor's responsibility that auditor's report. we give that true and fair view of the financial statements and all those. But as the entity is growing, or as the economy is booming, okay, there's a lot and lot of technological changes happening around, lot and lot of new revenue streams coming up, and new type of entities coming in. And with that, keeping that in perspective, the government has made it that the auditor has to give a regulatory compliance report of each company with respect to certain areas only, with certain areas apart from the auditor's report. This is very much required, because to ensure that we have a regulatory compliance, there is a transparency, and company is accountable in every aspect, because they're dealing with the shareholders or stakeholders investments or money, or they're dealing with the public and government. So equally important, this CARO 2020 is equally important. As ma'am mentioned, 2016 this was introduced, but then we have a revised CARO reporting that came in CARO 2020, which has clauses, that is 21 clauses we are looking into. But you can ask me that, is it required to be, comply with CARO reporting for all the entities? No, not required for all the entities. It is only for specific entities. We see the applicability here. It is for private companies and public companies, regardless of what size it is. So private companies, firstly, which is having a reserves, paid up capital reserves and surplus, which is more than 1 CR. And or I say or, because any of this condition gets fulfilled, then we will fall under the CARO reporting. And having a company having a turnover of more than 10 crores, that is all in INR terms. So having a turnover of more than 10 crores, or a total borrowings of more than 1 CR. This total borrowings also includes the working capital or short-term loans or long-term loans or whatever is taken, including the interest accrued. So government makes sure that any private company falling under these thresholds, or a public company, regardless of the size, has to have a CARO reporting. So as an auditor, as a CA, as we are CAs, we have that auditing as one profession, where we go for external audits of the entities. Basically, this is for the statutory purpose, not for the internal auditors, but for statutory auditors. Okay. And but the government has made that there are some companies that is exempted under the CARO. As you see here, there are some small companies, Section 8 companies, banking companies, or OPC companies that is not required to fall under these CARO reporting, CARO 2020 reporting. So I hope you're clear with first thing, what is the applicability of CARO and which companies are supposed to do the CARO reporting. Now, coming to the second, we start with the clauses. So, without much delay, the first clause, because 21 clauses, I know it is very tedious to remember 21 clauses. I'm not asking the participants to remember all 21 clauses, but what can be done in each of the clauses is what we are stressing upon right now. And out of this 21 clauses, the first one is just the property, plant, and equipment. You might have a question that, ma'am, do we have to do the reporting only if it in case of it is a very big manufacturing company, or it is under any manufacturing sector? No, no, not at all. It is applicable, as I said, for all those public companies and the private companies falling under that category. So property, plant, and equipment, why it is actually required? Why did this come up? So first thing is that, as an auditor, what are the procedures that we are supposed to do is that we see whether the company has done a physical verification. The Companies Act also says that the company has to do that physical verification of the assets, whether they have done in a particular manner, and how much of the assets has been covered over the period, during the period, or is it like 100% covered over the 3 years or not, and at what regular intervals this verification is done. And in very large entities where there's manufacturing sectors, you'll have larger machines and land owned by the company, whether these are they valued yearly, on what intervals, and who is a valuer, because this valuation has to be given by the registered valuers only, and we cannot value the assets. Registered valuers has to value these assets. If there's any change in the value of these assets by more than 10%, then we will have to also disclose those details as to who is a registered valuer, because they must be competent enough to give the valuation, and what was the previous value, what is the value after the valuation, and because what is a 10% change that is impacting in my financial statements. All right. I hope I'm not faster. Okay. And third thing, there are intangible assets, that is land or property what they own. Whether all this land what they own is in the company's name, is it registered in the company's name or not? Why it is very much required? Because there's a lot of Benami properties that the government came up with, identifying a lot of companies having Benami properties. Okay. And that is totally non-compliant or totally against the law. So government gave us an additional responsibility for the auditors, that now you tell me whether every company whatever they hold the land is in their name or not. A simple activity that we have to do. You know that we obtain sufficient appropriate audit evidence from the client or the engagement, because we will have to verify certain details, and they are obliged to share all the details with us. So for the intangible assets, you can ask EC encumbrance certificates that they own, and the sale deed or property documents where they say that it is in the name of the company. That one particular activity can be done as part of audit procedure. So if in case we find out that the company is having any proceedings against it for holding any Benami properties, this when you're doing audit procedure, you must have also come across any contingent liabilities where company might have any legal proceedings against it, or they might be having legal proceedings put against other entities or any customers as such. So during that activity, we will know that any proceedings is against the company, and when you're scrutinizing it, if there's any Benami property, that any legal cases that is against the company regarding this Benami properties, that also can be identified, and that also needs to be reported. This in a just basically physical verification of the assets, their title deeds, their valuation, and the Benami property. These are the major ones that is required, and additional responsibility as part of the auditors to report. Going to clause 2. Clause 2 again is applicable only if you see it's in case of which is trading or manufacturing, because service sector doesn't have any inventory. It's all under the human resource that they deal with. So this also has similar to assets where there's a physical verification being done, but be very skeptical here that the company has a proper policy in place to conduct this physical verification of the inventory, because the verification has to be done under supervision. It cannot go beyond the supervision. It cannot be done just for the sake of doing it. If any discrepancy is found by the company, that is 10% or more deviation in their physically verified assets and in their books, that also needs to be brought in. So be very careful of this thing. Secondly, major thing is that the company to run the business, they need working capital, and to meet the working capital, they might have got any borrowings from the banks. And if any borrowings are there more than this 5 cr, more than 5 cr, if there is any borrowings that is there by the company, then the company might have to comply with the bank regulations. Bank says that, boss, you have taken 5 crores loan from me for your working capital requirement. Now you have to give me a stock report, or because this loan is taken as a collateral on the inventory of the company. So the company has to give them the stock reports every, that is quarterly returns will be filed with the banks. As an auditor, what we do, we take those stock reports, what is complied or what is filed with the bank or regulatories, and check that whatever they are disclosing in the reports is aligning with my books of accounts or not, because they might give a wrong figure to the bank, they can't give a wrong figure to me, right? Or they might be given wrong figure to me or not for the bank. So we will have to match and do this reconciliation. This is very important, because the company, the current assets ratio, the current ratios, current assets was by current liabilities, whatever we do, there we see the current ratio is met or not, just to see working capital requirement is not there. If working capital requirement, that means the company is under the going concern impact or impairment or whatever the other further implications can come in. So what the government says that you have an additional responsibility to see whether they have a higher working capital loan that is taken towards it, and whether they're complying or not. So this is second clause that we are very need to be careful about. I hope I'm in line, and if I'm speeding up, please let me know. And I hope my screen is also visible accordingly. Yeah. Okay. Now, coming to the next one is Third, investment guarantee, security, advances, or loans. They have put all these five things under one clause. Whether the company has given any investments, guarantees, or securities, or advances, or loans, because advances can be in the form of loans also. Okay, so it cannot be only that the company says, boss, I have given advance to a company again so and so PO that being raised and everything, and that advance is sitting on the other company's books for more than 2 3 years. Now you tell me for 1 year there might be an advance. For more than 1 year, those advance might be used as a working capital or any other purposes by the other company, right? And they might be getting as a free money, no interest paid, there is no repayment done, no demand over it, and I only have the PO and the other company is enjoying the money. This cannot be the case, right? So if there is any guarantees being given or any loans that is given if advance is given in the form of loans, as an auditor, we should be very careful about this particular clause where it says you will have to disclose the aggregate amount of this particular loan or investments done, and as on date, what is the balance that is being due. And because this should not affect my company operations, and if the repayment is done timely, the other company or the other party is doing that repayment to me. This can also be done to employees, employee advances and whatever we give, no, that also needs to be disclosed. So if any repayment are being timely being done with the interest, and interest cannot be exorbitant, right? It has to comply with whatever the threshold that the RBI says, okay, this is the interest that you can give, say 12% or 18% or whatever. It cannot be very less, neither high, but there must be a moderate rate of interest also. And if we have not got any repayments done more than 90 days, something is outstanding more than 90 days, that needs to be flagged off by the auditor in the CARO reporting. Okay. Against this, say the company have given a huge loan or advances, and the other company is saying that, boss, I can't repay you. Can you renew my loan? Can you give me fresh loan? Can you extend my tenure? That also needs to be taken into consideration. And loan repayable and demand. This is very, very important where I give a loan, say I have not given as part of advance, I've given as loan only, but repayable on demand. Whenever I demand, they will pay me. But when are you going to demand? There must be a certain clause, right? That I'll demand in a 6 months, I'll demand in a 1 year, I'll demand in a 2 years. So you to understand. But to understand this, what can be done? First thing, as an auditor, understand what is their control. What is there? You can have a walkthrough over the loan that is being given. Sit with the management or sit with a concerned person in the finance or whoever is responsible over this. Sit with them and understand, how do you actually give a loan? Is it through board approval? Is it based on the requirements of your subsidiaries or joint ventures or fellow associates or whoever? Based on the requirement, there is a request, both of the board approve those loans and advances. Who are going to review and approve the terms and conditions or clauses under these loans and advances? So all those you can understand as part of the control. Who is the control owner? Who is the preparer? Who is the reviewer? And how the amounts are being dispersed. You can also take their bank statements and check that these loan amounts are being dispersed. If it is material amount, you can do that for the checks and see that the sanction letters are, you also have the sanction letters in hand when you're giving this. And substantive procedures is again, yeah, you can go through every loans and investment that is given. So as a clause 3, be careful about this, and you have to report an aggregate amount, and you have to report of any outstanding more than 90 days. Okay. With this, we move to the clause 4, compliance section 185 and 186. What does one section 185 and 186 says? It says that if you are going to give any loans or anything to the directors of the company, so directors of the company or any relatives of the directors of the company or any party who is related to directors of the company, you will have to comply with section 185, 186. I'm sorry, I won't be able to dig into this section more because it is a next whole, again, the whole chapter of section 185, 186. But to give a gist of it, make sure that whatever is released is within the approved limits. Okay. First thing, it is under the approved limits. Guarantees are given under the approved limits. Also, when you're doing the financial statements disclosures, all these are being disclosed in the financial statements. Apart from giving in the CARO report, you'll also make sure that related party transactions and disclosures, KMP disclosures, all these are coming into a picture. And company can just give it away the loans and whatever the investments or guarantees to directors. It has to go through the board approval, and for that special resolution has to be passed. So make sure that you take the minutes of the meeting of the company and this resolution is being passed, and then only these funds are being released. End of the day, also make sure that these funds are utilized for the proper purpose, because in the minutes also they capture why this is being released to the directors. Okay, so make sure that the end use of the funds are also in align with whatever the purpose it has been taken care of. Okay, and it is taken given at the fair rates. Coming to fifth, section 5, deposits. So, deposits with respect to this, again, section 73 and 76 says that there are certain deposits that is, it cannot, before picture of 2013 Companies Act, the company could give deposits. Okay, so they could accept deposits. So when they could accept deposits, it's a public deposit. We are very much responsible to make a good use of this deposit. It's not used for any fraudulent purpose. It has to be used for the particular end use. But when you're accepting deposits also, you should make sure that why the deposits are being taken, whether it is complying with all the statutory conditions as per the RBI. There's certain RBI guidelines which says that if you accept deposit, you have to maintain like 15% of the reserves has to be maintained, and this deposits, it should only have a certain limit of the deposit that's being taken, and proper documentation of all these deposits needs to be done, that whether the deposits are being repaid, or is there any interest that is being given, or and also it is very documented properly, you have proper records being maintained, and you're protecting your interest of the depositor as well. So RBI makes sure that this, if you see, all these clauses are in line with RBI, in line with SEBI, in line with the Companies Act. So we can't just say that okay, we are auditing just based on the Companies Act. No, lot of other regulations also we have to take in care about when we're doing the auditing of these companies. When it comes to deposits also, you make sure that there's a proper control in place. Okay, I am stressing a lot of the control perspective, because as we go ahead, we see why this control perspective is very important, because there's one clause in CARO which says that there is adequate internal controls in place. Okay, next, coming to cost records might not be applicable to all, but there are certain threshold category where the cost records are very much applicable, and you fall under this category. Then cost records are maintained, and also you have a cost auditor in who has been appointed, who verifies this cost records. So as an auditor, we can say, okay, this cost auditor might be an external specialist, or auditor specialist, or external specialist, whom we are taking the details from them and verifying that the cost records are properly maintained. In our clause, when we are reporting in the CARO, we mentioned that the cost records are properly maintained and also verified by so and so auditor. That also can be put in place. So cost records also, why it is important, because as an auditor you might say, okay, it is not my responsibility, basically, right? It is responsibility of cost auditor to do it. But as an auditor, we also have to make sure that they have as I said, the working capital in place, they have budgets, they have forecasts, they have cash flows, right? So when they're doing the budgeting, when they're doing, then they're determining the cash flows or future cash flows, because it affects my going concern, it affects my, if I have to see if there's an impairment needs to be made, or all these to be taken into picture, we take the cost records, and we also see that if there is any comments given by the cost auditor, this can extra effort that can be done by an auditor to make sure that the going concern is in place and the future cash flows are properly defined, and also auditor has given a compliance on that. So this also can be this also as an extra activity can be done as audit procedure, but make sure that the cost records you have it in hand and you disclose it. Next is the statute. This is very important. Um, You might say, hey, company has a company secretary. They're already seeing whether they're filing the returns on time. They're already seeing the PF is done on time, PT is done on time. And because if they don't do, tax authorities are behind them. The other indirect GST authorities are behind them, or direct tax authorities are behind them, ITAT is behind them. Why should we do it? No, we are also supposed to do it because we make sure, as a substantive procedure in the financials, we make sure our current liabilities are coming in correctly, right? We make sure that they are filing the PF for the proper count of the employees also, correct? So what they're saying is that when they're already doing the substantive procedures as part of the audit, why don't you also report that there is anywhere these liabilities is not deposited or is not complied by the company and is not deposited in the government. So government tells you that, boss, as an auditor, please make sure that if they have not deposited any PF, ESI, PT, TDS, or whatever the statutes they are supposed to, is not deposited for more than 6 months. And when are we evaluating this more than 6 months? As on the date of the balance sheet. The balance sheet date is, as you know, the financial year 31st March, 1st April, 31st March, whatever. So as on 31st March, you see that any of these statutes are being deposited on time. And also, if it is exceeding 6 months, please make sure to disclose it. The disclosure also has a proper, table which says that the type of the statutes, the amount of the statutes, and the reason, and how much months it has been exceeding from non-deposit, and also the remarks. In the remarks, you can give the explanation. There are two types of statutes that you have to disclose. One is the undisputed statutes. That means you have a fault. Matlab, the company has a fault in its hand that they have not complied with the statutes, or they have not deposited the statutes. And second thing is disputed statutes. Probably they might not have to deposit that money with the government, or they've deposited a higher amount or lesser amount, and the government comes back saying that, no, boss, this is a wrong amount. So there's disputed statutes, there must be ongoing disputes. So if there is any disputed statutes, then you will have to collect the details of disputed statutes. How do we collect? How do we know that there might be a disputed statutes? Of course, if you go to contingent liability, maybe of the previous year, ma'am, we are the first year auditor. Now, how do I know that there is any disputed audit statutes? Take the company's previous year financials, see there's any contingent liability coming in, and see that there are any there might be you might have done a focus testing on the professional expenses, where you see that, okay, these parties are paying because this legal person is representing me in the court of law against certain cases. In that cases, there might be one such case where there's a disputed status, right? And some tax consultants might be hired to take care of disputed status. So you can dig deep and understand that to have a completeness check on whether there's disputed status or not. You can have this check and also make sure that these are brought in your CARO reporting. Okay, and I know this is very, very technical session, and I am trying to make it as common in a very layman, in a very less technical way, to make things understand, because I'm sure if there's more technical words, jargons put in, we all will doze off the entire session. And and also my sincere request is, this PPT, just listen to me. PPT is just for my reference, because I always stress on how the audience listens and perceives more than reading. Reading can be done in Google. I'm sure about it. You get a lot of guidance, you get a lot of notes, you get lot of data on the Google that you can read about. But this is on my what I'm saying might not be from the Google. It is out of my experience. So as an auditor, when we are doing this procedures, we have to be very careful when we are testing all these things. I know there's 21 clauses and there's a very less time, but we are stressing on what small things that we have to take care about when we're doing it, and how we can do it. So this is about the statutes. And the second thing is about unrecorded income. Again, ma'am, how do we know unrecorded income when they have not recorded only? How will I even identify? It is, I'm not having a seventh sense, or that magic wand where I can go and search, oh, where it is not unrecorded, where it is unrecorded. I do JE testing, I not found unrecorded income. No, this is not the case. Unrecorded income can be found out in the other ways also. there might be a lot of forums, they might be having cases, right? And ongoing legal cases against with respect to tax or whatever. And there the tax assessments, they might be having appeals, they might be having orders, demand orders, or assessment orders that they would have received. So collect it for the period whatever they have. Please collect it, please run through it. If you want to, you can involve any tax experts to run through it and see if there is any unrecorded income in their books. That also needs to be disclosed, okay? Because end of the day, it will have a financial impact on your financials as well. So this is a vicious cycle, okay? It's like you're not gonna just do it for the sake of reporting. If you find something, make sure that it has some financial impact in the books and you have recorded in the books. Example, as I said, there's some contingent liability. Probably they have not created provision only in their books. So make sure that you've identified some non-compliance and they're making a provision against it in their books. They're creating any contingent liability against that in their books. Okay. So this is why, again, unrecorded income can be done. This is another way you can do it. One more way is that that we send external confirmations, right? So identify who are the legal advisors, who are the tax advisors, who are the consultants. Send out an external confirmation to them, asking them, please give me the summary of whatever the ongoing cases the company has. So when they give you the summary as on 31st March, you will know that, okay, so and so cases are going on. Again, so and so assessments are going on. And in that, if there's any unrecorded income or any such non-compliance, you can identify the same. Okay. Now, coming to next one is default in repayment of borrowings. This is again very important. Borrowings, of course, not my money, not company's money, it is public money. End of the day, public go deposit in the banks, and the same is what is circulated to the companies as a borrowings. So we here also we have an additional responsibility when it comes to repayment of the borrowings. What do I do? First thing, take a schedule of the borrowings from the client, and I'm sure if they would have missed any in that, again you can go to the minutes of the meeting. So always make sure that you don't rely on only one source of data from the client, because we are sure that if you ask one source, they'll stick to one source only. They're not going to give you the any additional sources about that. It is our responsibility to ask, to question. That's when our professional skepticism or professional judgment comes in, questioning mind. So ask them, boss, you have borrowings, how do I verify? First thing, take their minutes of the meeting, run through the minutes, because all these borrowings will be high amount and it will always be approved by the board of directors. Make sure all the borrowings are approved by board of directors. Take this borrowings and take their schedule. See that every schedule what they have given, every borrowings in that has been approved by the board of directors, and how the repayments are happening. For that, take the sanction letters. Again, sanction letters will be there, given by the banks. Take the sanction letters, and end use of the loans is very important. But how do we verify end use? You know that the loans would be even taken for either taken for a capital investment that will be going to a lot of capital vendors, right? Capital, who will be giving me the capital assets, the vendors will be giving capital assets. So either the payment will be going to capital vendors against a certain POs, or I mean say purchase orders, or these loans will be taken for a particular project, right? So you will have to know for what purpose this loan is being taken. And board of directors, when they're approving also, they mention the purpose of this loans. Take their bank statement. You can verify that these amount that has come in for a particular project has been paid for the particular project, and you can see the 10 vendors who has helped in who has given the service for that particular project, the payment should have gone to that particular vendors. So this way you can make sure that the end use of the loan has been done. Not just this, if you see, the lot of banks nowadays are asking for certificate from the statutory auditors. Why? Because they want to know that whether we have verified the end use of the loan or not. They say that statutory auditors, sir, please give me the certificate telling that they have invested this amount for a particular project. So this also keep in mind that the end use has been tested, the sanction letters are in place, and they're not willful defaulters. Okay, willful defaulters. When I say willful defaulters, uh, when you send a confirmation to the bank as on 31st March, telling the sir, please confirm me the bank balance of this particular client, you include a clause there that whether have you identified any borrowings they have taken, they have willfully defaulted such borrowings. Okay, that is one clause you can include when you're sending a confirmation, external confirmation to the banks, and banks are very happy to disclose that whether they have been willful defaulter or not. Okay, this is one source where you can rely for getting a confirmation on whether this is a willful defaulter or not. And any loans have been raised or by pledging the securities of any subsidiaries, joint ventures or associates, because when you pledge the securities of them and take a loan for your purpose, you are obliged to pay. And also the subsidiary companies might be doing well, might not be doing well, you never know, right? So see that whether they're pledging their securities and taking the loan. Okay, because end of the day, if the subsidiary goes bankrupt, the bank also doesn't will not be able to repay the bank, because securities are held by the subsidiaries, and the gone case, the fund is just gone in the air. So be very careful and mindful about clause 9. Next is that these are all the small clauses which is not much stressful. If you have, if there's any, if a company goes for a public offer or a private offer, please make sure that the whatever the funds have been come from the IPO or the private offers is being properly used, and also prospectus has been given. Okay, then coming to fraud. Fraud is again a very important clause. Okay, before that, fraud under section 143 of the Companies Act says that there's a limit of the fraud up to 1 CR, up to 1 crore INR. If you have identified any fraud of such instances, please go and file with the MCA, with the government of India, that is MCA, telling that the company has done so and so fraud. Okay, up to 1 CR. More than 1 CR, then you will also have to involve audit committee of the company, and also you'll have to disclose in the audit committee that so and so fraud has been done, and it is, and you have filed the section 143 forms. If you don't do that, we are under radar. Now a lot of entities have been picked up by NAFRA to do the inspections, and NAFRA is like uh, very rigorous, very rigorously they're monitoring our audits. So now to it is a double triple check that we have to make, that if we have identified anything, we will have our own threshold, materiality, performance materiality, whatever we have fixed. Okay, doesn't mean that if our materiality or performance materiality is more than 1 CR, and you have identified some fraud which is less than my performance materiality, I don't have to go and report because it is not my job. No, definitely don't do that. If you are whatever fraud you have identified, even if it is performance mentality or mentality, it is exceeding or not exceeding, make sure if it is 1 CR and above, you have got and you have gone and filed 884 with the MCA. Okay, and how to identify frauds? Basically, every company will have a whistleblower. They'll have a whistleblower committee, right? Where either it will be an HR or be it depends on the size of the company, small or bigger, or whatever. Every company will have a whistleblower. So who will be handling this whistleblower complaints? Either the company secretary or somebody in the HR or company secretary will have this whistleblower complaints that is being handled. So take all the whistleblower complaints that they've got during the period, either that is open or closed as on 31st March, doesn't care. You'll have to take all the whistleblower complaints what you've got during the year, assess the what is the amount, first of all, what is the complaint that you've got, what is the amount, who are the parties involved, what is the action taken by the management, and then see whether they assess whether they fall under the fraud category or not, and then you can take the further action whether you have to go through 884 filing or not. Okay, this is one thing. Before that, you'll have to discuss with the management will try a lot to not to go and report. They'll try to convince you, no sir, no sir, we have taken some entry in the financials, we are taking this provision entry, we have nullified the effect of the fraud. No, don't stop there. Even though you have taken a hit in the books, even though there's a provision passed uh, against this entry, still you are supposed to file an 884 if that 1 year and above criteria is met. I'm sure I think I'm clear on this point. Uh, so I'll give a forum to discuss on your points. In case if you want to have any questions, you can still keep your raise hand or thumbs up. We'll further go to the next clause. The next clause is on the Nidhi companies and related parties. Nidhi companies is again depends if you're auditing a Nidhi company, you make sure that you have that certain RBI limit of the deposits being done and the rules are complied, and the member criteria, the eligibility that you a Nidhi company can have only certain limit of the members in the company that is being met. The important aspect here is the related party transactions. Related party transactions, why they brought into picture is because there was a lot of non-compliance with respect to this when the company started building up shell companies like subsidiaries and fellow subsidiaries and lot of layer companies, right? And they used to just I sell it to subsidiary, subsidiary sells it to me, and I raise an invoice to them, they raise an invoice to me. So they were simply inflating their books with these kind of transactions, and then they sell it reverse after reverse in the April month, they sell in the March and reverse in the April. They give lot of loans, deposits and everything. But as an auditor, what we have to do? First thing, in the financial statements, we disclose related party disclosures, right? Similarly, you'll have to make sure that any transactions with the related parties that the company does are in the arm's length pricing. Okay, because it should be at arm's length price. I cannot just give guarantee or securities just because okay, he is my child and I'll have to do it. The subsidiary is my child, my own child. I'm owning 100% stake in it and I'm responsible. That can be done. Any transaction with them has to be at the arm's length price, and for that see whether board members have approved the transactions with them. I also disclose every transactions in your financial statements, and see 188 transaction disclosures are complied with. Again, that comes in the schedule 3 financial statements that it is being complied with. Okay, certain transactions where the company's audit committee is it is responsible to have an audit committee, whether audit committee approval has been obtained when you're entering into such transactions. Okay, with that we just go to the next one, that is okay, I was stressing on why you should know about internal control. Internal control is because of this. So, clause 14 says that whether internal controls are in place, whether they have a proper segregation of duties, whether the organization structure is in place, and whether they have they have a maker checker concept, whether there's a review, there's no conflict of the make a checker here. So ensure that we as an auditor also have to see whether the internal controls are in place. And if there are any findings, please make sure that those findings are also disclosed in the CARO report. Non-cash transactions, if there is any asset transfers or asset acquisition with no consideration in exchange and with just an approval, make sure that there's a proper approval in place and it is done at a fair value, and all this asset transfer are involving the directors and shareholders approvals. So it is mandate that these non-cash transactions has to be approved, because it might be a chance where there might be any other benefit going for this asset transfers or non-cash transactions. So always make sure that these are being complied with. Okay, then comes about NBFC. This is majorly for the NBFC, non-banking financial institutes or companies, where they are having a valid certificates and then they're taking up the activities of NBFCs. They're core investment companies or not. All these you can dig deeper into sections and just run through. But major thing is whether they have NBFC certificate and then they're carrying the operations. They have that certificate of CIC and then they're carrying the operations. That is what the RBI is asking us to do, just to disclose it. Okay. 17 and 18, yeah. Cash losses. There is uh, all the transaction that losses what you're seeing in the PNL might not be a cash loss. It will have a lot of other non-cash transactions as well. So the CARO reporting says that please calculate what is a cash loss. Okay, because it can be a cash loss or profit, whatever, plus or minus. It is a second picture. But please make sure that you calculate that there are only cash losses or cash profit. What is the amount? If there is any cash loss that you have identified, kindly disclose it in the CARO reporting, that if you have a cash loss in the current year and in the preceding year, that means over the past 2 years, please make sure that you put there. Why the cash loss is very important? This is also a check as part of the going concern. You'll have to make sure that the company's going concern is good. They will give you, management will give you 100 reasons telling that, ma'am, my company is doing well, I have so and so orders from the customers, and I will have the cash flows in the future. Next 4-5 years, I have a projection. But from past 5 years, they're booking losses. Do you think booking losses and still having projections are doing good? Definitely not. That's when you'll have to see that whether the company is having a going concern or not, right? So this is one way of seeing whether the company is going concern or not, how the financial health is going good or not. Okay. Next, clause 18 says auditor change. Suddenly an auditor resigned, or there's an auditor change, it might be multiple reasons. Out of rotation, auditors has changed, or auditor has resigned, or the company management has taken an call that no, we will have a different auditor the next year. So make sure that before you get on board as an auditor, you know that you have an NOC from the previous auditor, and also the reason for the exit of the previous auditor. Then only you get onboarded. Till then, please don't accept the client. Please make sure to understand why the previous auditor has exited. Okay, because you never know, they might have exited because there might be no proper internal controls in place, or they might have not agreed to share substantial audit evidences, right? Substantial or analytical audit, whatever evidence, if sufficient audit evidence, they might have not agreed to share. They might have disagreed to take any entries in the books, or they might have no approvals in place, or all those things. There will be a lot of issues uh, which is giving rise to auditor change. So make sure that they are auditors, why they are being changed, and document the same and keep it with you. Okay, in your reporting or in your documents. And 18, 19, yes, the going concern which I was stressing more about, you will have to see the liquidity position, financial ratios. We do as part of the financial reporting in our disclosures, right? We do that ratios and analysis and everything. So make sure that they have proper liquidity ratios. And if you find any news, negative news about the company externally or internally, do that understanding of the entity, understanding the internal and external factors of the entity, which will give you whether the overall health of the company, how they're doing good or how the going concern is. Then CSR expenditure. Again, CSR expenditure, as per the Companies Act, whatever it says that the past 3 years of the profits, 2% of that, whether they're spending or not, if they're complied or not. If they're spending, how much they have spent, and if they're not spent, how much is unspent. If that unspent amount is put to the account within 30 days, which the company acts clearly says that you'll have to put the unspent account within 30 days of not spending it. If you have not spent it and if you're giving a provision for spending it, make sure that the provision is coming in the financials. If you're overspent and the company is willing to take that credit of the overspent in the next offset with the next year's spending amount, please make sure that that also is being disclosed. These disclosure obviously will come in the financial statement. These are not any extra procedures that we're doing. This is just that we are making sure, double checking that okay, this is done, and we are giving a separate report on it to the company, to the government. Okay. Next, the last one comes as a consolidated financial statements and qualification. Why this consolidated financial statements comes in is because as an auditor, I will have, say I've been appointed as statutory auditor of a company, but the company has lot of subsidiaries and lot of joint ventures or associates with it, and I don't know, or branches also. So I don't know how the branches or how the joint ventures or associates are working. Correct. So as an auditor of the parent company, my responsibility is that I send referral instructions. I say referral instructions, I mean I send certain instructions to the company of the group companies, other group companies, telling that, sir, if you have identified anywhere any deficiencies, any mishaps, or any frauds, or in case any significant transactions that needs to be taken care by me, that needs to be brought into my knowledge, please report it to me, please disclose it to me, so that I will also bring those pointers in my consolidated financial statements, because I might be doing the consolidated FS, and the component auditors may be doing the FS of the standalone FS of the subsidiaries. So I ask them, so please do make
Want
sure
the
that
blanket?
you come to me
Yeah.
and you report all this. So it also says that CARO might be applicable to you. Please give your key in whatever figures or what you have identified in your CARO. Please give it to me as well, because I will also report it in my CARO. Any clauses, qualifications are being made, please inform me. We have to stand in the shoes of both, as a as a parent company auditor as well as a component auditor, and see what best we can do, align with each other, so that we can comply with this reporting, and also as a responsibility inform this to the government as to what is happening. And if any group level findings are there, you'll have to report it, and also given the disclosures, all these in your financial statement disclosures has to be done. Now, it is why so much responsibility. What is that responsibility? Is that first thing, as I said, you'll have to collect the evidence, you'll have to do the documentation, and first basic thing as an auditor, an audit not documented is an audit not done. So as long as you have done something and then you don't document, you've collected evidences, you have done every procedure, but you just close your files and archive telling that, sir, I have done so and so audit and done. You don't know what NAFRA does? It comes back and says, please open your file, boss. We have to keep our audit for 7 to 8 years, approx, right? That whatever audit work papers we have done, we have to keep it as a document. And NAFRA comes and says, sir, please open your work papers. Let's see what documentation you have done. And we fail to tell, our work papers fail to tell that we have not done so and so documents. That means is as equivalent to as work not done. So please be very mindful about what you put in your work documentation, and what evidences that you collect, what has been verified. Kindly do it, or else we auditors, we cannot defend ourselves. We will be put under radar, and they will tell that you have not done your due diligence. Okay, so documentation must be in place, quality control, evidence collection, and clear reporting. All these are auditors' responsibilities that needs to be taken care of. Now, what is the best practice that can be done? Okay, I am. We are nearing to 5. Is it okay if I can extend for 5-10 minutes? We're almost done with
Yeah,
CARO. Only
yeah,
that I'll have to take a little of other things. So with that, okay, best practices as an auditor. What best practices we can do? So the first best practice is that, yeah, the documentation challenges that we have a lot of documentation challenges when it comes, because we might have not got income, we might have got incomplete data from the company, or we might have got incomplete what is that schedules and whatever, or irrelevant schedules and whatever. So what I can suggest you is that when you're planning the audit, initially when you're planning the audit, list on your CARO requirements also. We will send out a requirement list to the client, right? Including the CARO requirements, you make sure that you send out the CARO requirements also in the list. And in that list, include that, say, sir, you have any proceedings, give me the list of proceedings. You have any CSR expenditure, give me a list of CSR expenditure. So all those CARO requirements, you make sure, send them the requirements so that you get it at the initial of the audit. I know a lot of auditors, we actually prepare audit report at the end of the audit. I agree with it, but when we're in the end of preparing the audit report, we completely forget that some requirements we require have not been asked only. Okay, so never compromise on that quality. So always make sure this reporting's requirements goes in the beginning of the audit and not at the end of the audit. Then early planning will save you, and whatever the time and allocation of resources and everything can be done, and training, any technology also can be implemented. Say technology with respect to, if you're going on a physical verification, you can have proper say scanning of the barcodes, or taking their reports before in hand, and training your assistants to do this in a certain manner, so you can also comply with the CARO. All these trainings can be done, and this is the best practices that you can use. So with that, we are concluding on the CARO, that is CARO 2020. If any questions on the CARO, please let me know. Uh, if any questions on the CARO, I would love to take it.
I don't see any questions in the chat. So if you have any questions, please feel free to unmute yourself and ask the question.
So I have a question. The question is that, I assume they have identified there is an observation. So I think there is a standard format in reporting the observation, right? So is there something that you can throw light about, or is there some content that you can share so that all the observations that as an auditor one has to report is also standardized?
Okay. So for your question, Kusum, right? Thanks for the question. So now, since I was stressing more on documentation and everything, end of the day, you will have to present it as a report, as you said. Truly, yes, we have to present in the report. Now, if you go to the ICI guidance note on CARO, it has a detailed CARO 2020 with all the 21 clauses. It has a detailed listing of the CARO. Okay, so if you have to if you are presenting all your CARO whatever observations you have done, it has clause by clause with the wordings, which each wordings which can be actually replicated in our CARO reporting, and that's what most of the entities are doing. And because those are the words given by again ICI or MCA, right? So what I suggest is that you use that CARO guidance and go to every clause. There's a short brief. I'm not sure if I can present. Just give me a minute if I can, uh, have it handy. Guidance 2020. There's a small CARO guidance. In fact, what I used to do is that I'll tell you one card. Okay. So what I used to do is that we can just go back to our CA finals. Okay. We have this in CA final, we have a chapter CARO 2020. I'll present that, which is exactly what we're doing in practice also. Let me know if my screen is visible. This is actually
No.
not Jugaad also. I can say
Mm.
this is what we are practicing. So, yeah, I hope if my screen is visible, let me know. Yeah. Okay. Yes. Is this visible?
Yes.
Yeah. Okay. So if you see here, this is reporting under CARO. Okay. This I have taken from the material what we have, and the same is coming from the guidance. And if you see, there are wordings which says, first one is on the property, plant and equipment. This is the way we are reporting in CARO. If you pick up, I'm sorry, I won't be able to present any CARO reporting that we have done because of the confidentiality conflicts. You can go to any listed company financials. You can download the financials annual reports. There you will have CARO reporting given by the statutory auditors. You can precisely find the same wordings there, okay, which says it is companies maintaining proper books of accounts. This can be tweaked, but this is a format you can follow, that whether the company has been physically verified, title deeds are there, and this is the same table that we put in of the title deeds of the company when you're presenting. See if there's any change in 10%, what is that net carrying value? Example, I'm just giving you one clause example. So similarly, you have second clause here about the second clause here about the inventory, then about the investment. So all these are exactly, you can go and check one listed company CARO reporting and it will align. So you can use this as a format. This might help you a lot. It will also help you in doing your audit. You can run through the guidance note which says what procedures an auditor has to do when you're doing the CARO reporting. I know it's a very big guidance. It has like 250-300 pages. I'm sure it will take a lot of time, but if you have any doubt in a particular clause, you can just go there and you can identify what procedures can be done. But simply to put in smaller words, you can just do control testing, substantive testing, similar to whatever audit procedures you do, and then do this reporting. Yeah. I hope that helped, Kusum.
Yes, certainly.
Yeah, thank you. Any other questions?
There's a question from Sonia, and she's asking, will you recommend any audit software which is helpful?
Recommend. Sorry, I think I heard that 50%. Any recommend any software for uh,
Any
Which is
software,
helpful. Will
Okay,
you
which is
recommend any audit software which is helpful?
audit software. I actually have no idea on audit software, but I can recommend a few tools that can be used. You'll have a lot of Power BI tools, okay, outside. In the external parties that gives Power BI tools, you can use those tools. If not, still in a one step lower, you can go for Excel analytics. So if you take any, for example, you take any report or schedules from the client, say PPFR, a bigger PPFR you have, go to Excel Analytics. You can use the Excel Analytics tools to understand what is that PP and how the verifications and what percentage has been completed. It's simple Excel Analytics tools that you can use in the auditing, and you can use Power BI, and Power BI will give you a lot of very nice reports that will help you find if, for example, fraud reporting. Okay, you will have to do one test of your any legal expenses, any late filing, late fees that is being paid. Take the expense dump of the client, go to Power BI, just put this Excel schedule, and you can give it a keyword telling that please pick wherever there is something description called non-filing, fees, late fees, penalty, with these keywords names. I'm sure you would have done that JE testing, whatever journal entry testing. So you use a Power BI tool, it will help you pick up all those entries that is having these lines. So that will help you, in further audit procedures. So tools as such, I'm not sure of third party, but yeah, you can use these kind of, not software, but tools you can use. Yes, any more questions?
So I sorry, I was
I'm
so
here, Sunita. Take
yeah,
your time. I'm here.
yeah, yeah. Thank you.
I request all the participants if you are having any question related to CARO. I think we are done with all the questions.
Okay, then I'll take quickly 2 minutes. My one
Yeah,
topic was
sure, Anupama.
because
Take
I
5 minutes, not two
five is
minutes. Take 5 minutes. Yes.
thank you. First of all, happy Labor Day, everyone. I'm sure you might not agree, I'm not a labor, but still we are skilled labors. So happy Labor Day, everyone. And I'm really happy that a lot of people showed up on this session today, in spite of having a long weekend, where a lot of people will prioritize resting and sleeping and everything before all this. But you still have put that all that efforts and interest to show up and attend a technical session. I'm really glad, and thanks for that. So one small thing that might sound small, but I feel it's having a very big impact about how we can have your work life balance, or how we can enjoy your day-to-day work, and take care of your emotional well-being. I'm sure Friday Fleets have done a lot of other seminars on emotional well-being, but I would like to share my practice, which I keep telling to a lot of students also. I go on a lot of career counseling sessions where I keep telling students, and also a lot of other people who I keep meeting. First thing is that I practice gratitude. So every morning when I wake up, I just pray. Whether you believe in God or not, it is secondary. You pray. You just pray. Maybe your to God or to any superpower you believe, or you pray or you say thanks. Okay. If you don't pray, still fine. You can say thanks. So thanks to whom? Thanks to God first. I do, but again, if required. If not, second, thanks to parents, teachers, and I say thanks to yourself. So I say thanks to myself because I am keeping up that spirit every day to wake up and to do that activity every day. So if you start your day with a little gratitude, saying thanks to yourself, I'm sure I heard from Kalpana ma'am that participants here would like to have a very a strong comeback to this career. So when you have to get a strong comeback, first thing is that mentally you will have to be very strong, right? Technical knowledge, yeah, we are CAs, we have cracked CA, okay. CA is such a huge syllabus we have cracked. So learning and technical things is just a piece of cake. We can do it anytime, like we will do it. But only thing is we are fighting here. And this one, when you have to deal with, first thing is gratitude. You practice everyday gratitude. Just say thanks to yourself and keep pushing yourself, just 30 seconds of thanks to yourself. Entire day you will keep smiling. You will not realize. Entire day there's a big smile on your face. When there's a big smile on your face, entire day you have all the positive energy going down in your body, and you never know miracles happen. You think of something, something like manifestation. I'm not taking to that level. Manifestation is, it's secondary. Hard work is first thing. But when you say thanks, when you practice gratitude, first thing is emotionally you gets very strong, and you feel that positive changes in your life. So one practice you can do is practicing gratitude. I hope you that can be done. Second thing is, what I tell is, when you get a strong comeback, don't ever get into the peer pressure. Okay, don't ever compare yourselves with anybody in the whatever LinkedIn you see, or any social media for that sake, or any colleagues of yours. I just tell you that please don't fall into the traps of comparing yourself. This five fingers, not every finger is same, right? Similarly, not everyone is same. Everyone would have started early. Some would have started late, some would have started very late, or it all depends on the timing. But what I tell you is that have confidence, have faith in yourself, and never give up. The day you say I am done is the day you lose. Okay, so don't compare. I will never compare myself. My strengths, my weaknesses might be somebody else's strength. Somebody else's weakness might be my strength, but only work on your strength. So when you practice gratitude, now the mind becomes very clear what you want. So work on only what you want. And third thing, uh, how to reduce this stress, I'll tell you. Screen time. Please guys, reduce the screen time. The most phones and more screen time that we have, which is non-useful, I tell, like scrolling YouTubes and Instagrams and all those, which is not required. We are dumping overload of information. That's when our brain is not able to see. If you have to get something new into your brain, you'll have to delete old things, or else your memory will not be, it will not be having storage to have new memory. So if you have to learn new things, delete old things which is not required. So clear your cache memory, so that you can start learning new things. That is one thing. For that, please don't overload information with all the social media. Whatever you see, take what is required. Third, fourth, that will also give you mental peace, because you will not compare anybody else with your life. I practice meditation. I know a lot of people will like, oh, meditate. I know a lot of people say meditate, do yoga, meditate. It's okay. Meditate, but I'll tell you in a very different way. When you're meditating now, there's a lot of thoughts come in your mind, and when you're meditating, your brain will be more stressed with lot of thoughts, thinking I should not think about it, I should not think about it, I should not think about it. I'm telling you, when you meditate, leave your mind freely, think about it, but don't continually think about it. Say, for example, when you sit for meditation, just 5 minutes a day, just 5 minutes. When you sit for meditation, when you're closing your eyes, a thought comes in that, okay, today morning I woke up at 6, I was supposed to wake up at 5, and I did not prepare the breakfast early. Then my husband started scolding me, or my kids started scolding me. And after that, what happened? Okay, this guest came in. There's a connected thoughts. One connected thought. Okay, guest came in. Oh God, vegetables I didn't get. Oh God, what about vegetables? What food should I prepare? Oh, that day, that food which I prepared, that guest didn't like. A lot of connected thoughts. Okay, so when you get that connected thoughts, pause. That's all. When you get unconnected thoughts are like, okay, so I'm wearing a green dress. Fine. One unconnected. Okay, the fan is running. Okay. Okay, there's somebody screaming in the back end. Okay. That's unconnected thought. That you're not connecting with anything else. That is your environmental thought. Accept that environmental thought and still sit to meditate. Meditation is not something that nothing comes to your brain. Brain has a lot of things to be running in the back end. So my suggestion is, brain will process, and allow it to process, and in the process let it go. let it go, and then simply sit. When I sit, I keep my hands like this and sit. I'm not telling keep mudras or do this or do this or whatever. If you keep your hands like this, you can quickly do one small activity also. Just imagine sitting yourself and keep your hands like this and breathe. Your breath gets stuck here. Try it. Your breath gets stuck here. If you would like to, you can switch on your video also. I would like to see if you're. I mean, I'm not auditing here that whether you're doing it or not. I'm just trying to give it. So if you sit like this, now you open your arms and breathe. You can take your air until your abdomen, right? You can give me a thumbs up if you are able to experience this. Yeah, or yeah. Oh, great. So whenever you're breathing, whenever you're thinking, na, don't keep your hands closed and breathe. It will also when you breathing is what is connecting your body. Okay, when you do like this and when your breath gets stuck, you're not able to connect your mind as well. So when you're breathing, breathe like this flow of air, and every inch of your body gets the air, your mind is relaxed. So when you're meditating also, you can sit like this. And when at times when you're stressed and when you're not able to think now, keep your hands like this and breathe. You'll be able to get clarity of thoughts. Try this, but it comes with practice. Okay, so I suggest, no, I advise or I recommend, or how can I say, I wish that all of you practice this, meditation technique where you just let go of thoughts and you breathe. And when you're breathing also, just relax and breathe. Sit for 5-10 minutes and breathe. Maybe that is also a form of meditation. What we do is that, see, we have a soul and we have a physical body, right? What connects the soul and the physical body is a breath. So you can only feel your soul through your breath. You cannot feel your physical without breathe. So the interconnectivity between both is breathe. With breathing, your mind, your heart, your body, your soul, everything gets uh, connected. So practice these things. Gratitude, first thing. Second thing is that you try not to compare with yourself with your peers. Third thing, don't get into the over pressure by running through social media and everything. Take content what is only required by you. And fourth thing is that try meditating. Let go of thoughts. Let go of thoughts. If it comes in, let it stay. If you're trying blocking it, your head will start paining, and they're like, "Oh, Anupama ma'am said me one day to do meditation, and my head is paining a lot." So don't get into that. Okay, even if you let it go, your head will not pain. And then when you're doing, just do this and concentrate on your breathing when you're meditating. These things will really help you. Small things every day, 10 minutes. We give a lot of time for others, right? Okay, my friend is coming. Okay, they are coming. Guest is coming. Home people are coming. Kids are coming. Give time for yourself also. No, that is also very important. So keep this in mind. I hope this will help you a lot. And thank you so much everyone for participating, and thanks a lot to the founders and the team. Seriously, you guys are doing a great job, and thanks everyone.
Thank you so much, Anupama. It was a beautiful, wonderful session. Every bit of it, the technical bit of it, you exhaustively explained everything, and obviously the mindfulness and the meditation aspect of how to keep ourselves well balanced. It was lovely. I'd like to call upon Kalpana, for a formal vote of thanks, and then we'll wind up the session.
Congratulations, Anupama, for touching technical and another very important self-help area which we all need and to share with Raghav. So in my life, to have that come back, gratitude is something that helped me a lot. And coming back to the CARO conversation, so there are multiple things that is going at my home. There's a paint going on. You have mentioned about meditation. So my husband left for 7-day meditation. So he went for a meditation center in Delhi where he will be doing it. And at the same time, kids and so I miss the real conversation of CARO, and I'll follow through YouTube recording that we had, because couple of clauses I have heard the conversation and the discussion. I really appreciate, Anupama. You have put in your best effort to cover every aspect when it comes to checking the compliance part and the reporting part of CARO. Thank you so much. As a token of gratitude, I would like to share a certificate of appreciation presented to our speaker for the day, CA Anupama B. Thank you so much, Anupama, for such a wonderful and exhaustive, thorough session on CARO, and that discussion when it comes to managing all and having that peace with our own self. Thank you.
Thank you so much. Thanks for that.
Last but not the least, thanks to all our participants for showing up in every session, and to our moderator of the session, CA Sunita Rathod, who is always been there on the stage, behind the stage, to curate every session to her best effort and make every session count and quality to match the quality that we always expect to bring on the stage. Thank you, everyone. Thank you so much, Anupama. One more.
Thank you. Thank you.
Thank you. We
Yes,
wind up the session now.
and
Sorry,
our
yes.
core team member, CA Jyoti Maru, a person behind the scene. I missed to mention her name. So most of the speaker, the conversation that is going on, it is she's who help her to get connected with the speaker. See, Jyoti, are you there to switch on your camera? I request everyone. It's 1st May. So Pallavi was mentioning, she was wishing everyone happy Buddha Purnima. Thank you, Jyoti. Request everyone to please switch on your camera.
Hello, everyone.
We will take a group photograph. So let's start this practice, Sunita. From now onwards, at the end of the session, we will take a group photograph, a virtual group photograph. Kusum, Sonia, Kushali, Alpa, Rovena, Pallavi, and Home PC. Thank you, Sonia. Thank you, Kusum. Okay. So on a count of 3, we will take a screenshot. It's done. One more I'll take, just putting this in our group. Sunita, can you
Thank you,
help me to
Anupama.
take one more? Thank you. So Anupama, what I was thinking, we will have a session, dedicated session, where you will discuss what you have discussed at the last 5-10 minutes.
Sure,
Let's-
sure.
Let's
I
have
would
that
love to.
conversation.
Sure.
Sure, Sunita, we'll have that. We'll
Yes,
see how it
yes.
works when the calendar permits to.
Yes.
Thank you, everyone. Thank you, Sonia
you.
and Kusum, for switching on your camera.
Thank you, everyone. Thank you.
Thank
Thank you.
you,
Have a
Jyoti.
great weekend.
Yeah, happy weekend.
Happy weekend, everyone.
Bye.
Bye.
Thank you, everyone. Bye bye.